Hey, what's up, everybody? It's Pete. Good morning and welcome to Stocks for Breakfast. Today is Thursday, March 12th, 2020. And we got some more pretty big news yesterday on coronavirus. So I kind of feel like I'm going to start to stay away from making any longer term trading calls, for lack of a better way of putting it. I just think at this point, there's so much daily news coming out every day, including a couple of pretty big things that we're going to discuss right now, that there is opportunity. And I don't want to at all make light of coronavirus, but we are here to talk about trading, and we're specifically going to talk about day trading opportunities until the situation changes, because these 1,000 point moves and monster moves to the downside, they're massive volatility, and I don't think it's responsible, because I don't really personally know anybody, for me to be talking about anything longer term than stuff that can be managed. However, so what we're going to do today is we're going to review a list of stocks. I've actually got quite a bit of emails about the list of stocks that I have on the right side of my screen every day. And that's basically my basket that I watch every day. So I'm going to do some what I'll call rapid fire review, where we're going to just look at how to have possibly traded some of them during the day, so I can give you that. My whole goal is to give you ideas for setting up structure for your own trading scenarios. So we're going to just look at day trading situations right now. The VIX is through the roof. We talked about that a little bit yesterday, which means increased volatility, which is creating some really amazing short-term, specifically day trading opportunities. Um, I wanted to briefly touch on a couple of headlines, which we'll actually get to in a second. The futures are down really big again, but in case you haven't read the news yet, the president did a speech last night talking limiting global European travel. Um, the NBA has suspended the rest of the season indefinitely. One of the players, I believe, on the Utah Jazz, tested positive, and Tom Hanks and his wife are in Australia and tested positive for coronavirus as well. So hope that they get a speedy recovery, as well as anybody else who has the virus right now. But we're here to talk trading. We're here to talk about opportunity for what we do for a living. We can't stop what we do for a living. That's the big thing. So we're going to go right over to the charts and get to it. All right, so we're actually going to look at the headlines first. S&P down, reached limit down again. One thing I want to point out is they're talking about the June contract here. That's actually something interesting that many stock traders don't know. The futures markets actually have rotating contracts depending on what type of future or commodity it is. The S&P, for example, has 4 different contract months. So the March is actually expiring soon, and the liquidity and the volume drops and then stops, and then we move out to the June contract. So if you ever actually happen to trade futures, make sure that you are trading the right contract month. So the June contract went limit down, which we could see over here. It didn't lock limit down like we saw, what was it, a couple of days ago over here. That's what you'll end up seeing, where it actually goes down and stops. It doesn't even trade. It went limit down here and did not lock, actually. So you can see we're actually coming down. What I want to talk about very quickly, again, I don't want to beat this into the ground. It's more of a tape reading lesson. I was on a call yesterday afternoon with John, one of my coaching students, who's really doing incredibly well right now. We happened to notice that the SPY, although we had some massive swings during the day, which is why we keep talking about day trading opportunities, we were kind of stuck in this 3-day trading range, and we both came to the same conclusion that if we didn't get massively negative news again, this looked like it was a spot where the selling was starting to dry up, and for a potential opportunity to look to initiate some longs if certain situations unfolded. So the situation we were looking for is kind of exactly what happened here, where this 3-day range, we were looking at that if today opened flat. So I just want to walk you through the scenario. If today opened flat, and again, I'm actually going to do a podcast probably next Monday on trading terminology. Flat means it basically opens at the same price. If it opened flat, pushed lower, and reversed, there was a good chance that that would have caught a lot of people off guard intraday with sell orders, sell short orders, or stop loss orders below that level. And to see it reverse could have caused another short covering rally like we actually had over here and back over here, right? But obviously we're not getting that. So I want to make it clear that was a part of what's a good trading mindset, is building if-then scenarios. But here's the key, and I'm just going to come back to the screen really quick. Here's the key about really becoming a good, consistent trader. Somebody who takes money out of the market on a regular basis. It's your job to create, if this happens, then I'm going to do this. If this happens, then I'm going to do this. But before you get to if this happens, you have to build that argument. If I'm above the 20 period moving average, if I'm above yesterday's high, if I'm above yesterday's close, if I'm well bid on the daily candlesticks, if I'm above, the more of those you put in there, you're like, okay, that sounds great. And I have room to go, meaning profit potential. That's kind of my language. Profit potential is room to go. If all those things happen, then I'm going to do this. The second part is just as important as the first part, because remember, it's our job to identify what's probably going to happen next. That's building an argument, right? So if we build a good argument, what's probably going to happen next, then I'm going to do this. That second part is crucially important because it's our job to flawlessly execute. So that's what I said yesterday. I got a couple of emails yesterday from where I implied trading was easy. And I'm not saying trading was easy, but trading is super simple when you understand it's nothing more than math. It's if you have an edge, which is a key part there. If you have an edge and you flawlessly execute it over and over and over again, that's how algorithms make money. They don't second guess, well, oh, this time I'm not going to take the trade. They take every single one, and that's how profitable algorithms end up making money over time. They don't second guess the strategy. So if this, then this. If this happens, then I'm doing this. If this happens, then I'm doing this. So the implication that I was making, actually, I'm going to take that back. The explicit point I was trying to make is trading should not be stressful if you have your if-then scenarios built out prior to the market opening. Okay, so I just want to get to that point. That's the mindset that you should have, and that's the part that's where you want to get to as a trader. So we're going to get back over to the charts. So that was the scenario if the market opened lower today, and if it opened flat and then opened lower. So in other words, if it was here, pushed lower again, and then did this kind of price action, traded up here, we were talking about initiating a small long because prices were in a 3-day trading range, looking to see if the selling was slowing down. But as you can see, the news actually got worse overnight. The president went on last night, did not say anything shocking, but the fact that we're getting to this point now where it's affecting so much of our lives right now. We're just going to talk about day trading right now. There's really no other way to put it. So what we're going to do is we're going to jump over to the charts, and we're just going to go through. I'm going to actually go through stocks that were down the most yesterday. The dollar amount really doesn't matter. It's really more about discussing the trade setup coming into the day, and hopefully, again, I'll give you some ideas so you can come up with if-then scenarios. I'm going to put the 20 and the 50 on the charts. Most stocks are below this, but I just wanted to. I'm going to point out some scenarios. Just simple, basic technical analysis without getting too complicated. If the 20s price is above the 20 and the 20s above the 50, those are scenarios where you should be a little bit more aggressive because everything's in the right order to expect follow through. So if this happens, then I'm going to do this, and then that'll affect how your trade management is. So we're just going to go through some stocks. Obviously, most of them are below, but here's the key: Amazon's not. The 20 is still above the 50. So what does that tell you? That tells you, despite the fact that we have all of this selling going on, the moving averages have not confirmed a change of trend. So how does that affect your trade management? Well, that affects your trade management by saying it's not the scenario where I should be more aggressive on the short side. This is not a stock where I should be looking for aggressive shorts. And here's the key. We're actually going to look at this because I actually took a quick look at the chart there. The basic moving average here, right? Look at all the changes above the open in Amazon because it doesn't fit the criteria of a sell short that we just saw in the SPY. I'm just going to go back to that really quick. So the SPY at this point turned down. Amazon has a lot more closes above the open. Does that mean you get long? No, this is much, much bigger than just the charts. I'm talking about day trading strategies here in normal market conditions. Okay, so you can see here where the price actually got back above, which, by the way, I want to mention that this is not the best setup. Let me see if I can find another one, because it's actually a really good trading setup. I want to find a perfect one to illustrate the point, and I think you're going to like it, actually. Let's see. We might not find one because of the severity of the moves. Home Depot, you can see I'm working those charts hard. Okay, right here. This is actually a good example here. So you can see we have the 20-period moving average, and you can see we have the 50. What I'm going to do, I'm going to end this video. I don't want to go through all of them because it's too much to cover in this video, and I want to make sure you have your time to get to the market. But this is a super simple strategy that can be applied pretty quickly. And it's one that I've actually used for years. If I'm not mistaken, I created this one in 2004. So this is one that I've been using for a long time. So what we're going to use is we're going to use price action itself, and we're going to use moving averages. And I'm actually, you know what? I'm actually going to turn the 50 just for this example. Actually, I'm going to turn it back on. I'm going to turn the 50 into the 10, and I'm going to show you why. And you're going to like this, trust me. So essentially what we're going to do here is we're going to pay attention to when price action crosses the moving average first to indicate a change of trend, and then when the moving average crosses later, and how to use that. So I'm actually, let me see if I can find a different stock, because it actually just changed with me moving the moving averages. So let's see. Again, we're in extreme conditions here, so it's kind of, oh, okay, here's a good one in Amgen. All right, so you can see that the 10 is above the 20. Let me get rid of this just to get it off the screen. The 10 is above the 20, and price action is good here, right? So in this spot right here, price action falls below the 20-period moving average. So that's going to be the first aggressive entry signal for a long. So essentially what I'm setting up here is a aggressive entry and then a conservative follow-up add to that position. And what's kind of cool about the strategy I'm about to show you is that it works for both entries and exits. And it's a really simple A plus B plus C strategy of how to use it. When you start to add longer term stuff, like, so for example, if we use the 50-period moving average on top of that, you might decide not to take the strategy unless they're on the other side of the 50. So we have the 10, the 20. I'm going to convert the 200 into the 50, and I'm going to show you. I don't know why I'm kind of excited about showing this to you right now. So what we're going to do is we're going to mostly take the strategies that are on the right side of the moving average. So, but I'm going to talk about this here first, just as a general use of the strategy. So you can see here, the red candle here, price action right here closed below the 20. So I'm not looking at the shorter term moving average right now. I'm just looking at this guy right here. So that would be the first entry as a potential change of trend and an early entry. The second entry would be if the moving average, which obviously is slower, also crosses the other moving average, which looks like it happened maybe 1 day later. That's kind of an extreme example where it happens that quick. But here's what happens on the other side. When price goes back above to the other side, you would exit half of it. So you had entry 1 here with price crossing the 20. Entry 2, the moving average crosses over. Now, normally it doesn't happen that fast, but it's fine. I'm going to illustrate the same thing. So you have entry 1, entry 2 when the moving average crosses down. So entry 1 is price crossing to this side of the 20. Entry 2, moving average joins that price. Now you'd stay in the trade as long as you have 2 scenarios. In this case here, price closes back above the 20, but the moving average doesn't yet. So price trades back above the 20, you remove half of the position. Price closes back below the 20, and the 20 and the 10 stay below the 20. So you would still be in half the position. And if you wanted to, because this candle here where it closes back below, you could add that position back, and you could see that all the way down, despite this bounce here. Well, I guess 240 down to 206. You might have booked some profits there, but price and the moving average actually stays below. This actually doesn't close above it, so you'd actually end up having half of your position on the entire time. The moving average crossed here, so you probably would get out of half of it here if you're super disciplined. might not have because price was still all the way down here. Not really sure why price spiked over there. I guess it was because of this here is the moving average. But you get the point. It's a very orderly way of entering and exit trades. It does require some, I guess, what you would call what's the word? Discretionary decisions. So actually, we will. I can't find any more because the price. I might have to go back this way a little bit. I want to try and find one more good example. So actually, yeah, we could do it right here. This is a good one. I'm going to move square up the charts just so that you can see it clearly. So you can see we're in square ink. So price is moving up here. Again, we're not adding any moving average or longer term filters. We're just doing straight off the price action. So the 10 period moving average is above the 20 here. Price here closes below the 20. So that would be entry number one or exit number one if you happen to be long here. Remember, we could do it on both sides. So that would be entry number one. And then you could see 2 days later, the moving average crosses below as well. So that would be you'd have your full position now at two different entries here. Price rolls down and actually price stays below the 10 period moving average the whole time, which indicates that it's pretty, I don't want to say strong. It's pretty strong in that direction. But then price actually gaps higher here, closes above. So you take off, well, actually, no, I'm sorry, that's the 10. It would be here would be the exit for the first piece. And if you didn't end up exiting the whole thing here with this gap, price moves all the way back over here. So despite the fact that this bounced really hard, it's really more about the strategy that I'm showing you and how to implement it than how it actually ends up unfolding. Because again, we're in some pretty amazing day trading opportunities here right now. So again, entry number one, price closes on this side. Entry number two, the moving average crosses over. Now I'm using the 10 and the 20. In the past, if I was trading a little more aggressively, I might actually use a shorter term moving average, maybe the 5, but the 10 and the 20 is actually pretty good. But again, you can also add the 50 as a indicator to determine if you even want to be in the positions at all, meaning that you would use it as a filter. Let me see if I can add that on the chart there. I'm not sure. There you go. So you would use the 50 to say, okay, I'm only going to look for longs if the 20 is above the 50. Let me put the 10 back in there. I'm only going to look for longs if the 20 is above the 50, and then use the entry signals the way I just discussed. So in this case here, there's really no specific entry prices over there because we were below over here. So that one's not working out. But you know what? I'm actually going to come back to the screen because that's actually, despite the fact that it was hard to find there, that's actually trading. That's exciting because, and I think I mentioned it yesterday or maybe the day before. If you can't find good signals, if you can't find good setups, that's awesome. And I'm going to tell you why. That means you have a strategy. That means you have a strategy. You should never be looking at the market every day and saying, yeah, there's a ton of stuff to me to do every single day. No, that maybe if you're super hyper trading and you're trading on super short time frames all the time, which obviously that's my background going way back to 2000. But most people who are not full-time day traders in front of the screen all day, or even if you are a full-time, there has to be certain situations where you say, that's my edge. That's my edge. And it's actually kind of cool that I wasn't able to find perfect scenarios because that means that signal, that setup, that strategy is not there all the time. But when it is, I'm telling you, it's a really easy way to identify opportunities using the 50 period moving average to determine whether you want to be a buyer or seller, having the 20 above or below to determine if you want to be a buyer or seller, so the 20 above the 50, looking for price to pull back and then reverse while it's still above those moving averages. Price crossing above the 20 would be the first entry. Price crossing, the moving average crossing, 10 crossing above the 20 would be the second entry. And then the opposite on the other side as a potential exit. Here's the reason why that strategy works really well. Because we're using two different time frames on the one chart. Price action itself moves faster than the moving averages. So that's the first piece to enter or exit. And then you give yourself a chance to hold the trade because the moving averages are slower. Sometimes you end up staying in the whole position or half the position for a much bigger move because the moving average did not cross below, the 10 did not cross below the 20. And it's a really good way to identify a simple strategy without all the mumbo jumbo of the thousands of potential indicators that you can use. They have their place and time. Trust me, I've tried every one of them. I don't use them anymore. What you see is what I use. I would never show you something that I don't actually do. And I can virtually guarantee you that most of the big traders that I've been around, including myself, we don't make it complicated. We keep it as simple as possible. We're just looking to read the tape. What's going on right now and how do I make a decision? That's it. So anyway, thank you for joining today. If you enjoyed these videos, it would be awesome if you could click down, subscribe. If you have any questions, absolutely leave them in the comments. I'll get back to you as soon as possible. So this is Pete Renzulli signing off. Hopefully you got some good ideas today. Have an awesome day and stay super disciplined, everybody. Take care.